Hello, everyone. I just wanted to take a moment to tell you about this awesome video interview that I just had with a very well experienced mortgage broker. He's a great partner to us at the Living Luxury Atlanta team and has some good news and good information that I think you'll appreciate. Now, somewhere around the 10-minute mark, he talks about how great the rates are and that he expects them to stay that way for at least the next few months. So stay tuned to the end and hear about our low touch and touchless home tours for our buyers, also our $2,500 closing cost certificate, and most importantly, our 24-month buyback guarantee. If you are watching this dude right here, this is the magic man. This is the money
Okay.
guy that make this thing work. Sam Mauldin is our preferred lender that we work with at the Living Luxury Atlanta team. Him and his team at NEXA, they just do a fantastic job. So Sam, quick, the difference between like a tradition, or I guess what we know as a lender, and then you as a mortgage broker. I have my little thing that I say about it, but I guess since I have the horse here, we can hear from the horse's mouth.
All right, cool. Yeah, so we're brokers. So we're actually partnered up with about 70 different lenders, which means we're actually able to shop for clients to make sure that they're getting the best deal and also take stock of the client's particular situation and find who's going to be the best fit for them. One lender may say no, another lender may say yes. So you're just going to have more options, and your likelihood of getting the best deal that you possibly can is going to be a lot higher by working with us.
Yeah, and in fact, on one of the deals that we're working now, we had started with one lender, but then you found a lender that maybe was a better fit and more beneficial to the buyer, and you switched them over, right?
Exactly. Yep.
Okay.
Yeah, that's what's at the heart of why I'm at where I'm at and what I do. I want to make sure that I'm always putting the borrower and everyone involved in the best situation. So
Right.
that's right on
And
point.
how long have you're a youngster compared to me. How long have you been in the lending business?
About 5.5 years.
Okay,
Yeah,
okay, all right, good, good, good. So you've had a chance to get your butt kicked a little bit, I suppose.
a little bit. I get that's a nice way to put it. Yeah.
Right. Okay, so Sam, in this time, so okay, we know it's a crazy time, but you and I are still keeping busy. We're still helping people. I know that you initially, when things first kind of hit, I know you kind of got ran over a little bit with refis, and
Mhm.
then of course you're still helping buyers with new purchases. So one, just I've been promoting to everybody how the new normal is to be touchless, no contact and stuff. You guys already have some technological things in place, so that was already easy for you. So if you real quick explain that, because in fact your office is closed completely, right? You can't even go
Yeah,
to
yeah, we're
the
shut
office.
down. We got kicked out.
Yeah,
Yeah, yeah.
yeah. So tell
We're an
us a little bit
essential
about that.
service, but we got kicked out of the office, so we still got to stay at home. So.
Yep.
Yeah.
Okay. Okay. So tell us about the technology that you're using for like documents and the other pieces that are associated with the loan.
Sure. And so as far as documents and application, we're really big on using an online application. One, it's going to be a lot easier, more convenient for the borrower. As far as I'm not the best typist, and so when they're able to enter in their own address information and put all that information and make sure it's accurate, their name is spelled correctly and everything, get all the information to us, and then we have a conversation based on what they've already provided, rather than it just being the conversation being data entry.
Right.
It's just a lot more of a productive conversation. And as far as documents, we have a secure online portal, which just makes it super easy for clients just to upload it securely without having to send it through an email, which can be unsecure.
Yep. Yep.
And especially this day and age, you don't want to compromise your information. That's really important to us to have an easy and also safe way for borrowers to get all the information they need to us.
Right. 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 And then now with your portal, because I only see so much. That part of the deal is private with a buyer client. So, but things are still the same. People still need what like what's the documents that you're gonna always need. Just initially when you're first doing the application, what should they expect?
Uh, Typically, I mean, if you're a normal person who has a salary or works for an employer, your last 2 years W-2s, your most recent two pay stubs, your most recent two bank statements. It's kind of the rule of twos.
Yeah.
Two bank statements, two pay stubs, two W-2s, and your driver's license.
Hmm.
And those are typically, if you're self-employed or you have a lot of commission income or income that varies, tax returns, your last 2 years tax returns as well.
Okay.
And that's something that people get confused a lot, tax returns and W-2s, because no one studies the difference between those things for fun unless you're a CPA or whatever. Those are different documents. So, if you're ever confused on that, you can always check in.
Okay. Okay. And speaking of that, so W-2s only the taxes if you ask for them, but like initially you don't necessarily need the taxes. But speaking of
Yeah.
that, with this, in this particular time that we're in, if you do need taxes, are you able to order them through the IRS portal, or has that changed at least temporarily?
Yeah, that's changed temporarily. So pretty much it's a no-go for lenders ordering transcripts through the IRS right now. And so buyers are having to, a step they normally would not have to do to get those transcripts if they're needed. They're not always, but if they're needed to go to the IRS website themselves and request them themselves. We've created a template to help people assist people with that, to make it easy for them, to walk them through that, to make it easy,
Okay.
since it's not a normal step. And not, you don't normally associate easy with IRS. So yeah,
That's true.
try to make that a little bit better.
Okay, okay, all right. And then now, okay, so give me I don't know, give us the bad news first, Sam. What's the bad of this? And I know there's some good stuff too. So let's get the bad stuff over with about how this is going to be impactful.
At least temporarily, government loans, which are your FHA, VA, USDA loans, the credit criteria has really, really tightened up a lot recently in response to the coronavirus. If you want me to go into detail on why, I'm happy to, but I'll save people that if it's not needed. But it's really, really tightened up, and the options there have tightened up quite a bit, at least temporarily. That we expect that will subside eventually, but
Mhm.
right now it's the new temporary norm. Yeah, as far
Right.
as that.
So because I know for you, you guys can, because you're a mortgage broker, you've been able to kind of have work with a lot of different types of files. Not your favorite, but even an occasional 580, you've been able to get through. 620, has been pretty decent. So is a 620, if someone has a 620 or below, is it pretty much a no go for a government loan, or is there still a possibility? And then 640 and up, is that still big thumbs up?
It is from lender to lender. So I'll say this: we still have an option. There's one lender in particular, but we have one. There's one I can think of right now
Okay.
that still goes actually even down below 580 in some instances. They'll still do that, but because they're the only one left, they have been absolutely flooded.
Yeah.
And their turn times. I mean, you're talking close to, yeah, yeah, 45 to 60 days.
Okay.
And so that'd be the
But still
downside, but there's still an option there.
good. Yeah.
There's still an option there.
Okay.
And that can change on a daily basis too. I mean, that's I literally I'll call them every couple of days like, "Hey, you guys still doing this right now?" Because everyone else is backed out and just want to make sure, just before
Right.
I get too far down this path. Yeah, so
Right. Because what before, Sam, for people kind of in that, or lenders in that category, did you have like three or four options before?
oh, several more than that. If
Okay.
we'd have several different options, but tons of lenders right now just completely backed out of. They basically, whether they're overtly or covertly, they're just saying we aren't comfortable with these loans right now.
Gotcha. Okay. Okay. And then okay, so but the 620s and above, I know that's kind of been what is considered the bread and butter, I guess, or that's been just kind of a regular. You didn't have to jump through any hoops for those. Are 620s and above still good?
There's some added restrictions right now in general. With that one lender, I would say in particular, same thing. It's just going to take longer. That's
Okay.
all. But everywhere else, in general, 640 credit score is probably going to be the new norm. A lot of lenders will do anything below 640 right now.
Okay.
Even at 640, they're going to want to see um, lower debt ratios than they otherwise would have required before.
Okay.
Possibly an extra month or two reserves, which is just in another word for the equivalent of a mortgage payment
Sure.
in the bank.
Okay.
Um,
Okay.
yeah,
All right. So, for you and I, of course, we've got a lot of people in our pipeline in different stages of purchasing. We have a pretty good system. And I know that even though you've always had the option of the of one or two or few lenders that could do a lower credit score, you've been really good about advising people to do a few things just to bump their scores up. So,
yeah.
so we should definitely continue with that. So, okay, here's the question while we're sticking to the bad for people that have not anybody that's lost their job. Let's say their income has continued, um, but or maybe it's slowed down some. Not job loss, but slowed down some. So how in the end, like maybe not right now, but like when they go to buy in October and they had this little space of lower income, will you go all the way back to April and March to look at income, or will you just say, okay, well, what was your October and September income? Will that impact somebody that's buying further down the line?
It depends on the type of income they're receiving. So if someone's like they receive a salary, like
Hmm.
let's say someone, let's just say had a $60,000 a year salary, and that's what it is.
Hmm.
And temporarily that was changed just because of all this craziness that's going on. As long as you have a $60,000 salary, that's what they're again at the time of application, and you can prove that that's what you're currently receiving. They're going to go off of that. Same if you're, working an hourly job and it's 40 hours a week.
Hmm.
Where that would impact that negatively is if you have an hourly job and you're working part-time,
Okay.
or if you're receiving commissions, anything that has a variable
Okay.
income component to it.
Okay. All right. And then now I'm sure what we're going to see towards the end of this year and even next year is for some people a gap in employment. I have full
Mm.
faith that we're going to come back and it's going to be everybody's going to be awesome again and we're going to be dancing in the streets. But I know we're going to have these gaps of employment of 1 month or 2 months or 3 months. How do you can't see the future, but how do you think that'll be handled down the road and next year?
What I think, and there's already been a lot of talk about this because this is a unique circumstance. This isn't the normal gap of employment, historic numbers of people not working right now. So
Right.
that lenders are going to take that into consideration. They'll have some special guidance and rules about how to handle that. So they'll be a little bit more forgiving of
Okay.
a gap of employment during this time
Okay.
versus another time, if
Okay.
that makes sense.
Okay. Okay. And so now to the good. So this is what I'm wondering. So let me see. You said you've been in this business now for 5 years. It's been 17 years for me in March. 17
Oh
years.
wow.
Yep. 17 years in real estate. So I have been through two crashes before. And what I remember out of both the crashes came all these kind of stimulus and, these things to encourage people to purchase. Do you think that we're going to see something like that? Because I do know that real estate has to keep moving. I know basically property taxes more than anything have to keep going. Real estate needs to be moving. Real estate just so happens to be one of the most impactful industries that impacts all kinds of other industries nationwide. So I am grateful that we're able to still work and help buyers and sellers. Do you think that we're gonna see some kind of stimulus, some kind of benefit, something like that for home buyers as we come out of this issue?
Possibly. I don't know for sure. What I would say is all the components of a really strong housing market were there before this
All
COVID-19,
right,
and
agreed.
they're still there. It's just this is an unusual circumstance. So once we come on the other side of COVID-19, I expect the housing market's still going to be very, very strong.
Hmm.
And we're going to still definitely have historically low interest rates, which is going to increase the buying power for people. And I would actually say even uh, now is a great time to look just because I mean it's been a seller's market for so long. And if you're looking to possibly get a deal or get a property that right now you may be able to get something that you might not have at another time.
Yeah.
That's but beyond that, I don't know if there'll be any special stimulus. There's already a lot of stimulus packages just for as far as income. I don't
Right.
know as it pertains to real estate.
Yeah.
Um, there may be, but I don't know for sure.
Yeah.
But I know I expect that once we're on the other side of this, we'll be in a very strong housing market still. I don't think um, this is gonna be like a permanent or like a really long drought
Yeah,
in the real estate market.
agreed. And okay, so right now, Sam, oh my gosh, I'm so jealous. Is it bad that I'm jealous of my clients and the rates that they have that they're getting with you? Because I don't see a lot of their financial information. You keep that private, just so you guys know. I'm the realtor. I'm the house, and Sam's the money. So I don't really see a lot of it until the end, until like those last few minutes or those last few days before closing, and then someone will say, "Hey, I got my CD," and they'll ask me a question, and I'm like, "Well, I don't have it, so send it to me." And then I see it, and like Sam, when I'm these rates that I'm like floored. I remember we refied this house maybe about 7 years ago, and we purchased a house like 14 years ago, and then we refied maybe 7 years ago. And I can't remember where we were at before, but we went down to maybe a 5.25. And Sam, I was dancing in the streets about that 5.25. I was like, "Oh my God, you're not gonna believe it's so amazing. I'm never leaving this house. I'm never leaving this mortgage." And then my clients are getting these great rates with you. How do you do it? What's the rates right now? I mean, they may change in the future, but for right now, I'm telling people, if you can buy with this guy, because the rates are freaking amazing. Tell us, how are you doing this?
So it's a couple of different things. One, the market is just really, really good right now. And so, I mean, we're at historically low interest rates, and it's just a great time as far as the amount of buying power that your money's going to get you. And so, that's definitely part of it. Another part is one of the advantages of us, having being a broker, being able to shop between over 70 different lenders, and we're able to find the best deal for clients.
Right.
And that's one of the things I love about being where I'm at, and just making sure that I'm always putting them in the best spot.
Yeah.
And yeah. And so, I mean, rates right now, I could get into trouble if I start quoting
Don't quote
specific
rates,
rates just for
Sam.
clients.
Get in
Yeah, yeah, I
trouble.
won't do that. But they're very, very low. They're very, very low. And they're historically low. So the amount of home that you're able to purchase right now, especially if you were comparing it to a year and a half ago, with the same amount of money, is drastically increased.
Yeah.
So it is a fantastic time to buy right now.
Yeah. And then you guys, one of the things that's unique about you're minimal with your fees, with your lender fees, right?
Mhm.
Yeah, I'm sure that
Yeah,
helps
that's
you.
correct.
Yep. Okay.
Yeah.
All right, Sam. Well, thank you so much for taking a few minutes with me to talk about all of this. You guys, I will tell you that Sam definitely knows what he's doing. He's got a head for this math and stuff. Sometimes he'll start going down a path of math, and I'm like, dude, stop. I don't need all that. I can't even keep up. So I'm glad to have him as a partner. But the other thing about this guy, he really truly has a heart, which we all do with the Living Luxury Atlanta team and with Sam, the NEXA Mortgage. Like, we really do have a heart. We love what we do. And we really, really love helping people. Sam and I we've worked together on a couple deals that have gone sideways, and we had to pull them through. Sometimes I tell
Yeah.
him we're like parents and we gave birth to a loan because we
Yeah.
labor. but we get it done for our clients. So Sam, I absolutely adore having you as a partner so that I can do a great job for my clients. Thank you for being an awesome guy, and we'll keep this thing rolling.
Sounds great. Thanks so much for having me on, and I can say all the same things about you. Great working with you.
Okay, take care, Sam. Thanks.
All right. Thanks. Bye.
Okay, guys, I hope that you found that information as helpful and as inspiring as I did. We have helped so many buyers to buy a home, buy the place that they call home, and we're excited to continue to be able to do it. As you probably already know, we are an essential business, and we have made all the great adjustments we needed to in order to help our clients to buy great homes even in a time such as this. But some things that aren't different for us, some things we didn't have to adjust, was things like our exclusive 24-month buyback guarantee. This is a sample of our certificate. And so when you buy a home with us, and if you don't love it and you let us know, within 24 months, we will buy it back. Now, there are some terms and conditions related to it, but it's a great program that just minimizes any risk or afterthought that you may have about buying a home. So click on the link and so you can get some more information about that. And if you'd like to talk to us about it, please call our office directly at 678-915-9286, or definitely fill in the information on the website. And then don't forget, we do have 4 $2,500 closing cost certificates that we are able to give away. Closing costs is just kind of some fees that are related to purchasing a home, different from down payment, but we are happy to help people that are interested in buying a home with our $2,500 closing cost certificate. That's free money for you. Okay, guys, Erika Page again, president of the Living Luxury Atlanta team and Your Home Sold Guaranteed Realty. Please check us out. Go to our website, livingluxuryatlanta.com. We are working. We've been working. We absolutely love what we do, and we look forward to doing it for you.